The market sings, sometimes a siren song so loud that it drowns out reason. And Bitcoin? Today, it played that melody, shocking everyone with a surge that now, in the cold light of morning, looks like nothing but a trap. There is a peculiar beauty, a cruel choreography, in how hope can be whipped into a frenzy, only to be slapped back to reality. Because now, Bitcoin has retreated, slinking back into its cage, a phase of deep consolidation. And consolidation, for those watching closely, is not just silence, it is tension. It is the moment when buyers and sellers pause, circle each other, and quietly prepare for the next decisive move. I'm here, heart pounding, hands trembling, to share something raw. What these new signals mean for us, for you, for anyone brave enough to watch. Welcome to Crypto 101 Central. If you resonate, if you, too, feel the pulse of the market in your veins, consider subscribing. Your journey deserves more than silence. Click the bell and let every update find you as soon as it ignites. Let me plunge straight into the thick of it. Because today I am not here to recite numbers, but to unravel emotions, lay bare my own fears and the truths I see. In the shortest of time frames, the chart whispered to us, promising something greater the moment Bitcoin burst beyond a critical wall, a fortress of resistance. In trading language, resistance is simply a level where price has historically struggled to climb higher, a place where sellers gather like guards at the gates. For a fleeting breath, we soared. Yet as quickly as that flight began, gravity took hold, a sharp drop, each moment a punch to optimism. I watched, eyes wide, as consolidation devoured that hope. It was not just a dip, but the revelation of weakness. The music of the market shifted to a minor key, echoing sorrow and anticipation both. Oddly, I do not fear this descent. It is not my adversary. It is, almost, a promise. Looking back over the years, the wild winters, the ferocious bear markets, I see a pattern. Corrections so vast they stretch out like an abyss. In past cycles, Bitcoin crashed more than 70%. I carry these scars as reminders, but also as guides. Bear markets, they tell me, lose some cruelty with each return. Perhaps this time a deep correction is enough to mark the end, the bottom, a place where the pain and opportunity are equally immense. Markets rarely reward impatience, they reward endurance. Yet there is a shadow behind every candle flicker. The Federal Reserve, quietly flooding the world with liquidity yet again, just as it did in 2020. The expansion of their balance sheet is not a detail. It is the drumbeat underneath this entire dance. When money is conjured from thin air, assets that cannot be printed, assets with strict supply limits, suddenly become magnets for capital. Bitcoin, capped forever at 21 million coins, lives precisely in that space. Scarce, neutral, unmoved by the politics of printing presses. And so I wait. My plan is clear in mind, as clear as the relentless ticking of the clock. From the lower parts of this range, I begin to accumulate, step by step as the price falls. Each correction becomes an opportunity. This is not a gamble but a campaign built on patience. Experienced traders often call this scaling in, slowly building a position rather than trying to catch the exact bottom. There is a line I have drawn for myself. Should Bitcoin collapse below a critical psychological level, one that would silence doubters and electrify believers, I would shift everything toward Bitcoin. Because then a powerful recovery over the following years becomes not fantasy, but possibility. Markets often move in cycles of despair followed by disbelief, then optimism, and finally euphoria. Understanding that rhythm can change the way you see every crash. I have stood at the edge of this market for almost 10 years. That number weighs on me, rich with memory, thick with lessons, of victory, of regret, of days where sleep came only in fragments between trades. And here, right here, at this juncture, I see a swing long position beginning to form. Not just because of the Fibonacci levels, though they matter, a mathematical poetry beneath the chaos, but because of the confluence of signals left by past consolidations and past turning points. For those unfamiliar, Fibonacci levels are tools traders use to estimate where corrections might pause. They come from a mathematical sequence discovered centuries ago, yet somehow they appear again and again in financial markets, almost like fingerprints left behind by collective human behavior. Bitcoin, like a beast, drinks deeply from liquidity near the bottom. Liquidity, in simple terms, is where large clusters of orders sit, places where traders are waiting to buy or sell. I have learned to trust the rhythm of its hunger. There is mercy in this moment because the leverage I choose is not reckless. I can let Bitcoin slip lower without fear of immediate liquidation. With every step down, my average price improves. With every hour, my conviction grows stronger. Maybe you find echoes of your own journey in mine. Maybe you are watching from the sidelines with trembling hands, wondering if you too can risk patience. Watching a market move without acting can feel unbearable, yet sometimes restraint is the most powerful strategy a trader has. Halfway through, if my words have struck any chord within you, gift this video with a like. It is more than vanity, it tells others, silent and uncertain, that they are not alone. And if my thoughts spark something inside you, let it spill into the comments. Your voice matters. I will read every spark of hope or warning. Back to the pulse of now. Bitcoin is once again circling its range, like a wolf retracing the edge of its den. What do I see? I see the danger and the promise. The lower boundary of the range weighs heavily on the chart, an area filled with worry and opportunity. Below that sits another deeper level where long-term buyers may step in. The heat map reveals its secrets, a concentration of liquidity shining in that lower range. Heat maps are visual tools used by traders to locate where large orders are stacked in the order book. They often reveal where the market may gravitate next, because price tends to move toward areas of dense liquidity. Yes, the market could reverse and surge again. I do not deny the possibility. Crypto markets are famous for sudden reversals, where panic quickly transforms into explosive rallies. But all signs suggest further testing of lower levels first. If not immediately, then after a temporary bounce. My orders remain patient. Always, in this life, patience is the hardest teacher. But it is the only one that offers mastery. Now, as I slide into the close, I peer at the weekly candles. A tall wick juts from the top, bright and jagged, a wound, or a sign. History teaches plain lessons. Such candles, especially in downtrends, often mark the start of deeper corrections. A bounce, then another descent. So I prepare, in my trades and in my mindset, for lower prices. And if my caution proves unnecessary, my spot holdings will carry me through. This is how I survive. This is how I refuse to become prey. In crypto, survival is often more important than brilliance. Ethereum waits in the shadow of Bitcoin. If the day comes that Ethereum reaches my long-watched levels, I will not hesitate. That will be a major accumulation zone. Throughout the years, Bitcoin has often led the market, while Ethereum and other assets follow once momentum returns. Time slipped by almost unnoticed today. This video arrived late, but if you share this obsession, if the dance of numbers and hope and loss haunts you, my words are still for you. Subscribe if you have not yet. Please hit the bell and let the story continue in every update. And when this ends, wander to the next video. There is always more to discover, always another secret hidden in the noise. I am grateful. I am restless. I am still here, eyes fixed on the screens, heart open, ready for dawn or darkness. Until next time, this is Crypto 101 Central, and I will see you on the other side. Peace. Goodbye.